Hi, hello everyone. This is Shiva once again from scalperpros. Today, what are we going to talk? It's one of the most heated and then like an overheated subject in terms of the market movement. When I say heated, why it is heated? Because we are going to be talking about volatility index. Yes, you guessed it right, India Vix. How and why India Vix is going to be a factor which you needed to be tracking for your intraday trading. Today in our video, you're going to be seeing about India Vix and how it is going to be impacting the index now. India Vix. What is India Vix all about? Volatility index of the Nifty 50 stocks. When I talk about the Nifty 50, all the stocks which is going to be part of the Nifty 50 will be like in tracked and how quickly like in the price action happening on each and every stock and whether there is a volatility in each and every stock of that Nifty 50. These are the 50 top companies in India. So when they are tracking it, they wanted to understand, is there going to be a move on the upside or on the downside on that particular scripts? So volatility index is going to give you that clue. When I say it is going to be giving you the clue, there are you can use it for intraday, you can use it for positional as well. Intraday, the biggest advantage is the volatility index can go higher and lower. Based on that, you will be able to predict your next move, whether there is a fight which has been happening between a bull and a bear. Volatility index doesn't move like an higher or lower without any fact. It will always move higher or lower only when there is a tough fight happening between a bull and a bear. That's what the volatility index is going to be showing it to you. Imagine there will be a day wherein you will be seeing the market moving higher and higher. On the same day, if you see the volatility index also moving higher, that means someone is not happy with the way the market is moving higher. They are creating a position to give a fight to the bulls. In that scenario, you can expect the bulls to give up or the bears to gain strength. So anything can happen on that particular day. That is where you needed to be keenly tracking volatility index as one of the dots for me when I explain it in my video. So volatility index for both intraday and positional, first and foremost, we have like in floor criteria. One, if the volatility index is moving along and the market is also moving along higher, when both travel together, then that's not a good news for me, because at higher level, someone is trying to create a short position and that can obviously pull the market down. On the other hand, markets keep going higher and higher and the volatility index is going lower and lower, which is giving you a clue that nobody is trying to fight with the market and this market has the potential to go higher and higher. This is where you will see most of the bull investors who will be getting into the system and they will be trying to add more positions. Third one, when the fall is starting in an index, especially in Nifty 50, if you are observing the volatility index is spiking through the roof, then that means you can expect the fall to be happening further. As long as the volatility index keep rising higher and higher, that is not going to be a good news. That means someone is obviously shorting this index very strong. So there is a direct negative correlation between the VIX and then the Nifty 50. So if the Nifty 50 is falling and if you see the VIX moving higher and higher, it is going to impact you and it is going to be impacting in a big manner. Historically, you would not be seeing the volatility index like in crossing beyond for 15, 16 and 17. Once in a while, it might go to like in 20, 25. That is due to like a budget or due to the elections or due to the parliamentary elections and so on. But if you are going to be observing last 10 or 15 year cycle, you will be seeing the volatility index staying below the 15 or 16 mark. Most probably you will be seeing it in 10 to 12, 12 to 14 kind of one range. So the last time you saw the volatility index spiking was around like in 2008 and 9, wherein it shot up like almost to 80, 85. Similar scenario played out during the COVID era. It almost shot up from 9.9 to almost 85 odd, 88 odd, and then slowly climbed back now. Now it is trading somewhere around 20. Is it a good time for you to look at like a long term and other things? Ideally not. Why? The long term doesn't, like a long term investor doesn't like the volatility index moving higher and lower. They wanted the volatility index to be stable for them to hold their positions for long term. Whenever you see the volatility index hovers around 10 and 11, you will see the people, even on like a small dip, people buying it in large quantity, adding more position. That means these guys are not expecting much volatility in the prices. They feel that whatever the little opportunity which I'm getting, that is a golden opportunity for me to invest more. At the same time, when it is around 12 to 14 range, they may not had like a large positions to their portfolio, but still they might add some 20-25%, keep adding it if they are getting a dip. But the same investor, when it is hovering around 15, 16 or 17, they will try to exit some of their positions. Why? They feel we have been investing in this system for a long time. We have been a long-term portfolio investors. This is not the ideal time when the volatility is going to be increasing. There is going to be a lot of fluctuation in the prices. Let us lighten our position. That they do it when the volatility index is between 15, 16 and 17. Anything above 17, 20 and above, you will see like a basket order selling. When I say basket order selling, they don't care about the price at which they would have bought it, or they would not be caring about how much profits they are making. You will see every day they come, dump and then go. You would have been seeing that. Just go and look at Bajaj Finance, HDFC Bank, Reliance during the March and April timeframe. These are all part of the Nifty 50. Look at the price action, how it was falling. But these guys are not the ones who would have bought it in the last 1 year. These guys would have been the ones who would have bought it in the last 10 years and holding the positions for like from 400 to like 5,000 odd levels for Bajaj Finance. They would ensure that even if they are exiting it, they would have exited it with a maximum profit. So volatility index is the one key factor the positional investors will look for. So when they will be coming back, like is there not going to be an area wherein the positional player will come back? They wanted to look for stability. When the index, volatility index went to almost 85, 88, when there is a stability, the volatility index is going to be screaming and telling it to you, guys, I cannot go any further higher. You guys have sold me enough. I'm not going to be climbing from here. You will see a stability coming in and then you will see a fall. The investors will keenly look for that fall and they will see, yes, if the fall is happening, let us go and add some position for short term. They will be looking for long-term positions once the Nifty P ratio and the volatility index cooling down. But yes, in the meantime, you will be seeing them making and adding more positions for the short-term portfolio. Why? You would have got the prices dead cheap. From the short-term perspective, you can always get like 100% or 50% return within 3 to 6 months. That's what has happened with many investors who would have entered into the COVID period. You guys are the lucky ones. Why I say you guys are the lucky ones? Because you guys got once in a lifetime opportunity when the Nifty P ratios came to 20 odd levels, and at the same time you also got Bajaj Finance and some of the the best Nifty 50 stocks getting it at a damn cheap price compared to year ago levels. The same Bajaj Finance 1 year ago, it was trading at like a 5,000 bucks. Today, it was trading at during March 23-24, it was trading somewhere around 1,900 to 1,800 odd levels. Today, the same price goes to like almost 4,500. Someone who wanted to triple their capital would have definitely be able to done that. So, you all know how the volatility index is going to be impacting the Nifty 50 stocks. So, if it is going to be moving higher and higher, when the market moves higher, there is going to be some kind of a sell-off that can be expected any time. You would have been wondering in the past, why did the market all of a sudden crash? Go and look at the chart and the volatility index on that particular day. You will get an answer. Because volatility index will give you a clue whether this market is going to be moving higher or lower on that particular day. Guys, doesn't mean that we just needed to only look at volatility index. In the past, when I was just looking at 1 or 2 parameters alone and trading it, I was not getting any results. Why? Because it is not going to be just the volatility index alone. In future videos, we are going to be looking at other indicators and other key elements which is going to be driving the prices of the option prices and also the market. So in this video, we have given a basic glimpse of how the volatility index is going to be impacting it and what are the things which you needed to know in basic to know how you can trade and using the volatility index. But in the coming videos, you will have a lot more interesting stuff. I hope you guys would have liked the basic concepts of the volatility index, and we will be sharing a lot more in detail through the program. I hope you guys would have liked it. Do share it, and most importantly, subscribe the video. Thank you all so much. Have a great day. Bye. See you on another video. Hey folks, to join our Telegram channel and Twitter ID, please see the description link below. Also, we are available on WhatsApp for further inquiries.